So what about your investment goals? What do you must have something in mind and by a certain age?
Yeah, age.
Not worried about the age thing?
Nah. I'm thinking it's not so much an age. I think I've gotten to a point now that if I just sold everything, had the family home, and put it into shares at a certain safe share return, then would be pretty comfortable.
Yeah.
So it's more about what can I do with the equity I have, and I'd like to make changes.
All right, g'day. I'm Andrew Malcolm, Mortgage HQ. I'm sitting here with Simon McDonald, and he's one of our top mortgage advisors. Welcome, and I want to quiz you a little bit about your journey as a mortgage advisor here, and introduce you. I know you've been on the podcast a bunch of times. I want to quiz you about your investment journey and what you've been learning. So, you're a top advisor in the making, and what have you settled in the last 12 months, roughly?
12 months. Oh, that's hard. I can say the last quarter we did over 35 million.
Yeah.
So yeah, and then a couple of 20 somethings for the other quarters. So
So you're confident to say you're more than 100 mil a year settlement settled, and certainly looks like you're growing your team and adding. You're trying to add associates. You're trying to add advisors under you and grow your own empire.
Yeah,
which I'm super proud to watch that journey. You've been investing in properties a long time. You're the family patriarch, and your previous experience wouldn't be like what people would call a traditional role to becoming a mortgage advisor. So, like, how did you get to become a mortgage advisor where you are now?
I felt like I was actually pushed into this position whereby everyone was coming to me, friends and family.
Yeah.
How did you do this? And what do you do here? And what's a revolving credit?
Yeah.
I never knew that would be the majority of my conversations after becoming an advisor.
Yeah.
But ultimately, it dawned on me that I enjoy doing this. So why not find a career that involves it? And so I think it was financial advice. And the reason why I was mortgages is because I was just so passionate about it.
Yeah.
I like the idea of utilizing mortgages as a tool to build a property portfolio.
Yeah, and that's what you've been doing for a long time, right? You first property when you're 19, was it? I know, 19, 20, early 20s?
20, yeah.
And was that when you were in the military?
No, I did a couple of property projects while I was in the military, and did a thing called house hacking, where I had several properties that I was renting out. That I rented out and then sublet. And making a little bit of cash flow that way. And also I lived in the garage for some time in a larger property.
Hey, you're a single young man, why not?
Yeah, I loved it. I liked the freedom of it, and having my own space, having the music up as loud as I can, not annoying the neighbor, and that kind of thing.
And so how's being an advisor shaped your investing so far?
Probably just way deeper understanding of how to utilize that mortgage a little bit better, and reduce risk over time. That's probably what it's done.
Yeah, I mean, you're helping hundreds of clients by now, probably. I'm guessing you have clients in the hundreds now. You've seen what works and what doesn't, and in terms of learning from clients, you're probably 99% of the time showing them how to do things, but there's always some clients that you're like, oh, that's actually a really good strategy.
Yes, yeah, absolutely. There's several clients that I'm taking on more and more these days that there is a mutual exchange of ideas. And there's definitely areas in the investment quadrant that I haven't really explored, and so a lot of that is the short-term stuff. Contemporaneous and flips. And although I've been involved in projects, they've been with usually properties that my friends and family are held for long periods of time, or I've held for long periods of time.
Yeah. And what do you think is the best part about being a financial advisor?
I think it's just holding people's hands throughout that journey, being that person to be called upon when what hits the fan. Someone's got you on the phone.
Doesn't always happen.
Not always
smooth.
No. But what I'm saying is that when that stuff does happen, and you're the one there providing solutions, it's a really good feeling when someone's stressed out and you can reduce that stress. And so that's one of the biggest things that I like. The second biggest thing would probably be, that innovative sharing of ideas right at the cusp of my knowledge and pushing the boundaries.
Yeah.
And then also right at the beginning journey where first home buyers are coming in and finding it hard to get the first home, and then we get a family and a home.
Yeah, it is very rewarding to see that end result. And what about the lifestyle side of things? You're a contributing parent, that's for sure, based on your calendar.
Yeah. I try to do my best with the flexibility that the company provides.
Yeah.
And so when I first joined Mortgage HQ, I tried to show a large presence. But as the time went on, I felt I'd take advantage of the flexibility that is provided.
Yeah.
And so there's a lot of flexible hours that I fit around family, so I can do both.
Yeah, and the hardest part or worst part about being in the financial advisory space?
It's the hardest part. Even though it's the hardest, it's still part of that rewarding thing is probably trying to change my style so I can communicate to everyone as opposed to just the people I get along with.
Yeah.
I found... communication, people is the hardest thing. The deal's easy, right? The numbers make sense or it doesn't.
Yeah.
They're missing this or missing that, but it's the type of person that wants it to be communicated in a certain way.
Yeah.
And just learning that both from a clientele advisory basis, but also internally building a team. I felt like if you're wanting to build a diverse team, then you need to be able to communicate on multiple levels.
Yeah, I mean, reflecting on that, it's certainly your personal and professional development has accelerated a lot over the last couple of years because you've been receptive to that feedback. And as you pick up more clients and the volume of clients you work with each week picks up, inevitably there's going to be a few people that want to talk to someone else. They want to complain about the process or they want to have their 2 cents. And that having a team around you allows that client or prospective client to go to someone else, provide feedback that comes back around to you, and you can run and learn with that. I would say a lot of advisors that work on their own, they don't have the benefit of getting feedback from those people because they just leave.
Yeah.
And then they don't have the benefit of getting the team to help talk through those challenges and learn from it. So
100%.
No, I certainly think you've become a successful advisor and can see you reaching those top charts and having a much bigger team. What do you think makes a successful financial advisor?
It's a couple of things. One, I think the biggest thing is consistency. You need to have that consistent input to drive the outputs needed. And then it's just about getting a percentage point better every single day on some of the things that you can bring up to that level, and then leaning on others. You can't do it all yourself. You're going to be good at certain aspects, and hopefully you're good at that front end sales,
the volume, the things. Calls.
Yeah, you're gonna have to be good at that as an advisor. Yeah. And if you're not, then maybe you want to integrate into a different part of the process. But that's a big part of being the advisor, especially at Mortgage HQ, because we've got support to do other parts. And so if you do well at that, you're going to do well as an advisor here at Mortgage HQ.
What about your investments you've got in place right now? What are you working on? What are you excited about?
Yeah, I've got a couple of things on the go, and I was hoping to be a little bit quicker, but like everyone, they got a bit sidetracked, with this economy and where it's headed, and
the interest rates going up so quickly has slowed things down.
And values dramatically decreasing. So. Development projects I had on the go, I've kind of said, some delays that have come up, some good and some bad. I've just kind of looked at it as, well, where's the good in this? Yeah. And so I always try to pick up the learnings along the way, but also it's just, things are delayed on that front, so I'm just refocusing in other areas. One of the things that I have put on the back burner for quite some time is the family and their priorities. So we're putting a lot of money into making sure that my wife is comfortable and the home is fit for purpose. So that's what we're doing at the moment. We're doing a renovation project on the existing home. Yeah. But that home is connected to a development site that we're looking to develop
Six properties on the back potentially, right?
Yeah, total 7-lot subdivision.
Yeah.
And really looking forward to push forward with that. And the nuance there is that we may incorporate it into a syndicate. And so, just learning a lot about how that works and how to provide. The biggest thing is, how do you provide value to the other people that are coming in on board? And so that's what I'm trying to structure, so that anyone who does work with me, especially this first one, wants to work with me again.
Yeah, of course, and leave meat on the bone for them. And if you let them share, like, there's preferred returns, there's proportional returns, there's a mix. And if you take your returns last rather than first, then it kind of aligns all the incentives. So what about your investment goals? What do you must have something in mind by a certain age?
Age.
Not worried about the age thing?
Nah. I'm thinking it's not so much an age. I think I've gotten to a point now that if I just sold everything, had the family home, and put it into shares at a certain safe share return, then would be pretty comfortable.
Yep.
So it's more about, what can I do with the equity I have, and I'd like to make changes. Like, that's why I like development, because I like to build things, right?
Yep.
I like to see that end product somewhere where it's a backyard. Now there's 2 families in these houses, that kind of thing. I really get a kick out of that. So I am in this industry to help people realize their goals as well. So I want to see them where I'm at, with some sort of security for them and their families. And so it starts with me, my community that I can reach through at Mortgage HQ, friends, family, that kind of thing. So That's where a lot of my my efforts go. But in terms of next steps, I think it's just a diversification away from making my development projects larger and larger and larger, to diversifying into cash flow a little bit more.
Yep.
It's definitely, the cycle has shown me that cash flow is king. And so it's just a matter of diversifying in that manner. And I think this is a really good time to do so as well. And I'm still in a privileged position to pause developments and increase the property portfolio size during a downturn, which some people aren't. They get into a position where they have to liquidate, which is the worst time, right? So.
Yep, and people are at different stages throughout their investment journey, and the cycle, you can predict some of it, but not always. But you can generally recover, and there's sometimes 2 steps forward, 1 step back, and that's all part of it. And I guess that's shaped your investment philosophies the last couple of years. Certainly, you've reframed a little bit. Capital gains have served you well. Cash flow is now important. The value add strategy with the developments, again, I think has worked out well for you, and I think you've got ambition to be investing in the business side of things a lot more as well. And your investment philosophies for your clients, I guess you're talking about cash flow a lot more lately.
That runs true with property and business, So it's definitely a refocus of mine to go towards more cash flow, whether it be business and or investments.
And so what investment are you most proud of so far?
The investment that stands out to me is the one I did with my brother.
Yeah.
And he was a surveyor.
Yeah.
And so he contributed a lot to the development that I've previously done. And so look back on photos and videos of us working together, and that's the thing I'm most proud of, is just doing it with friends and family.
Yeah.
He got a lot out of it. I got a lot out of it, and there was a sweet, a reward at the end.
Yeah, that's awesome.
Good equity. Yeah.
And what about investment that you wish you'd never done? And the lessons you took away from it. Got no regrets, or?
No, there's a couple of things in it, and it's I don't know if I regret it, because I learned so much.
Yeah.
And I think I would have done it differently. Yeah. And it was just the way I structured some joint ventures, where they got a lot out of it. I got a lot of learnings out of it, but I didn't really, do very well at the end in terms of the dollar, especially if I look at the time that I put into it.
Yeah.
This is both with property, but also like some personal ventures, some business ventures that I've had in the past. I am traditionally someone who wants to please other people.
Yeah.
So, and I'm the rescuer type, if anyone understands what that is. And so, so I have a tendency to try fix things. other people, and so I've found that that actually doesn't help. What you need to do is give them the opportunities and the tools and the support, and let them sort it out themselves. Because if you provide those options and opportunities, they don't meet you halfway, then that relationship's never going to work.
Yeah.
So it's,
unless it's arranged up front that the volume of work shifts, and so does where the property goes at the profit at the end. So what strategies have you used effectively for finding and negotiating on deals?
The biggest strategy that I've found is for me is that when I'm in a position to be able to acquire assets, I make sure that that there's some sort of margin or clear goal with exit strategies. But in terms of negotiating, I think I've been semi-lucky that the properties that I've been wanting to purchase have been semi-depressed markets, or at least halfway to three quarters down the depressed market cycle, and the properties had aspects to them that major developers. So there's a range of types of investors. And then you've got the owner occupiers, right? And so if the property doesn't fit cleanly within these boxes, and there's reasons why other people would just write it off, and you've got the skills, knowledge, and network to be able to provide advice. Knowledge is key, right? And so this is one of the things that I use with the negotiation, was that I don't point it out, but I just they're aware that this particular part of the property is something that other people have said that they're not happy with, and just putting a little bit of pressure there.
The problems that people see is an opportunity for a better price for you. Yeah,
and then also risk. So I'm a risk taker, and so I've done some negotiation moves where I've taken on probably a bit too much risk.
Yeah, I seem to remember in the past there was an unconditional offer when maybe the financing hadn't been sorted out yet.
Finance hadn't been sorted. I ran the numbers; it made sense to me. Consulted another broker at the time as well. We thought it was fine, so went through and no problems at the end.
I've certainly seen in this office plenty of unconditional offers without finance sorted, and if the deal's good enough, then you find the money.
Yeah, for sure.
So what types of properties are you recommending for these first-time investors coming through at the moment?
Yeah, first-time investors, it depends on their position. If their position is very high cash flow, a long runway for retirement, then there may be more of a balanced approach. But where interest rates are at the moment, where a lot of people are sitting, is that they're kind of feeling like this anyway, with their mortgage repayments, the cash flows. So it just makes sense to acquire a larger property portfolio size that's self-sustaining than just being stuck for a decade on a property that's, for example, a new build, stock standard new build in Auckland. That's
not
that's
growing in value,
and terrible yield as well.
Yeah, it certainly seems like a regional kind of cash flow based approach, as long as it's not in the wop-wops too much, and if you can see that value add, and it seems to be a winning strategy. You get the land, you get the value add opportunity, you get the cash flow. It's not in the area that you live, so you have to outsource almost everything. So it kind of makes you analyze things less emotionally.
I agree.
So what do you, what sort of lessons have come from mentors and coaches in the property and advisory space? I'm sure you would have learned from people outside of Mortgage HQ and people here too.
Yeah, I think there's a couple of things that stand out to me, and one of them is I talked about how the type of person I am. I like to see other people succeed, and I invest in a lot of people. And when you're doing more and more for more and more people, you just got to realize that sometimes it just doesn't work out.
Yeah. And
to not take things personally, and to not be so invested that you sink your own ship. Right. and so being there for someone is something I want to continue to do. But it's just about ensuring that you put that mask on yourself, that oxygen mask first.
Build your own strong foundation first. Yeah.
And so, let things go easier. If you're dealing with hundreds of clients, one of them, is not going to be happy with the process. So instead of trying to hyper focus on that and fix it, just realize actually what could have or what did go wrong here, and what can we do to fix it moving forward, and move forward in a positive manner. I think that's probably one of the things that I learned. Other things in relation to how to deal with different types of people. I'm quite a straight shooter.
Analytical.
Yeah.
We'll say analytical, blunt.
Yeah. I'm not good at picking up social cues sometimes as well. So some people have made some comments around what that may mean. But no, I think the sarcasm doesn't come very well for me as well. So it's just a matter of just taking a little bit to understand where the person's coming from, as opposed to just going straight to solutions.
Yeah, sometimes you got to be a little bit more black and white, especially when you're dealing with a couple. You add in your third kind of peculiarities, and then the two of them are different. You got to start kind of straight and narrow, and then learn about that dynamic as you go.
Yeah, 100%. Yeah, I find picking up on the cues that they get along with as well, and staying on those works quite well.
Well, sometimes they change who's in charge of the process as well, right? In the beginning, you might be dealing with a wife, for example, and then 2 or 3 weeks in, now all of a sudden you're dealing mainly with the husband, and
and dynamics of the conversation, how they communicate change, and for sure.
Usually, from what I've seen over the years, is the funniest kind of frustrations we've seen is when husband and wife aren't talking to each other, and one of them's getting extremely annoyed about not being communicated with, without realizing that we have been communicating to their partner. Yeah. And they haven't been sharing it with so
people work differently, and that's what I found as well, especially with couples, is that you may assume something because of that's how you do things, but it's not the case for everyone.
Yeah. Oh, well, we certainly appreciate you here, Simon, and look forward to watching your growth, and certainly watching you train more people under you to become mortgage advisors as well.
Yeah, I think that's one of the biggest spaces that I'm most excited with, is being able to grow a team and bring on existing brokers, bringing on new people through the system. I think that's where the growth is here, where I'm situated. So
awesome. All right, thank you.
Thank you.